Hey everyone, hope you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to hit up Twitter, see what's going on, people are talking about, see what charts other people are sharing out there. Obviously, we're in the middle of this commodity bull market. Looks like we're starting to take off into what I would consider wave three or the third leg of the commodity bull market. Fingers crossed that's the case. Let's look at some data. Let's look at some more evidence of that potentially occurring. So that's what I'm looking for. That's what I'm going to share, my opinions around all this. And again, if you want to follow me on the Twitter site, it's at finding_finance, or you can take advantage of a discount we've got going on finding-value.com. You can put in the discount code happy birthday. It's my birthday coming up in a little less than a week. And you can get a discount 50% off the first month. So let's go in here. Says no such thing as a low energy rich country. Electricity and income per capita for all countries. As countries become wealthier, their energy consumption goes up. What that basically means is wealth is energy and energy is wealth. Now, here's the tough part about this. All right. We are going to use more energy exponentially for as long as people can live because everyone wants to become wealthier. They don't want to become poorer. They don't want to go backwards. They don't want to go in the opposite direction. So everything in life, all of our, all these people on Twitter that are finance guys, all of the companies, they all want to grow wealth, grow sales, grow earnings, grow whatever it is. Banks want to grow their loan books to collect more interest payments, et cetera, et cetera. That all requires more energy. And you can see this directly related to basically GDP or electricity consumptions per person. Whatever it is, however you measure it, more energy is wealthier, however you look at it. Now, we got Buffett here. He's a pretty smart guy. He knows what's going on. It says Buffett absolutely hammering energy and commodity investments. Chevron, Oxy, Japanese commodity traders, and now all of Cove Point. So Warren Buffett ramps up bet on U.S. liquefied natural gas. Berkshire Hathaway will pay $3.3 billion to take total control of the Cove Point LNG export plant in Maryland. They previously had 25%. Buffett swooped in after global gas prices eased. Guys, this is it. In my opinion, the opportunities are now for a lot of these investments. And hopefully you've cost averaged in, you've got some really good prices, you're happy with the portfolio, you've position size correctly, you've got the right winners in that portfolio for this bull market. That is exactly what Warren Buffett is doing right now. We have a gigantic ramp up of US liquefied natural gas terminals coming out till late 2020. So it's happening now till late 2020s. I think that we are going to see a big move towards a repricing of Henry Hub natural gas to world pricing. That repricing will be higher for Henry Hub, and I think it will eventually equal out in the future as LNG terminals connect all of this up together. Coming on down, we got ECB. I would remember on the daily updates, we always talk about the dollar and the relative strength and weakness of all these different currencies. Well, here's the ECB. ECB is QT, so that's quantitative tightening continues with balance sheet shrank by another 12.8 billion to that. Lowest since March of 2021. ECB's total assets now equal to 53% of Eurozone GDP and Fed's 31% S&P. So you can see QT, we are dropping dramatically on the ECB balance sheet. This is what's causing the dollar to weaken. As other countries, Euro, Japan, whatever it is, as they raise rates or do QT or suck liquidity out of the system, that will have an effect on the DXY. We've seen this before in history where the dollar kind of shoots up and gets strong in terms of relative strength. And then towards the middle of the commodity bull market, we see the dollar start to weaken and these guys start to strengthen more so. So that happened in the 2000s, and I think it's going to happen here again, is what it seems like is occurring. We got JC here. He says silver's about to break out. Silver got whacked pretty hard by the London monkeys today. I wonder why. We're right here at a breakout, potential breakout for silver. Now, historically, silver has been trading with interest rates declining and silver goes up. I think that relationship will break at some point, much like it did in the 1970s. And I think we are going to go up with interest rates at some point. I don't know when that point is. But it does look like we're wanting to go higher here, and interest rates could fall. I don't know. Interest rates are kind of difficult to get right, I think, here in the short term. It could go up or down, or you could have the long end go up and the short end go down. That's a possibility too. But it does look like silver could break out any second. We got Furrick here. He says, if oil heads north of $150 a barrel, would everyone still want a green energy transition? Or would people be more worried about their standard of living and getting cheap energy again? I'm guessing the latter. So if we had a lot higher in energy costs, I think people would be more worried about their standard of living and getting cheap energy again than they would about green energy transition. I don't think the green energy transition can. I don't even think it's really going to offset much of the base energy that we already have today. I think we are too entrenched into fossil fuels, and I think that the growth rate of energy is too fast for green energy to actually dig into the base energy that's already there. So each year we have to grow energy at the rate of GDP. If GDP is growing at 3%, I don't know if that 3% growth in energy that's required, if green energy can outpace that in terms of minerals that are needed and all this other stuff. So I don't know. I'm still in the camp that we're going to use fossil fuels no matter what. And if green energy doesn't work, if the utilization or efficiency level, or I should say the utilization levels aren't high, you know what they're going to do? They're going to turn on natural gas plants. And natural gas is going to be the thing that pumps. That is where I am heavily positioned for something like that. Natural gas, uranium is also, which is nuclear. Nuclear would be another good bet for a long-term investment, because I think we have to go to these more energy dense and less mineral intense solutions. Here are the leading US markets for rent growth. A year ago, most of the 150 biggest market topped at 6%. Today, only 18 do. And it's definitely not the institutionally favored markets. The list is dominated by a mix of college towns, energy markets, Northeast, and Midwest. So we got Texas in here. So yeah, some of the East Coast I see a little bit, and a lot of Midwest, but that's net absorption in units. The asking rent growth leaders, 18% asking rent growth. So I thought that was interesting. This is the tightest monetary policy the U.S. has ever seen since 1983. I know a lot of people, for some reason, I look at these charts perhaps differently than maybe others. All right, so let's go through that. What I mean by that. It says monetary policy has become highly restrictive. The 10-year Treasury real yield, proxy for financial conditions, less the real neutral rate. So we're very tight right now. My question is, maybe this is signaling a problem in the market. I know a lot of people say every time you get here it turns and it goes back down. I mean, that could be the case. I'm not saying that it can't, but maybe it's signaling something different. I don't know. Maybe it's signaling that we have the worst imbalance in the housing market that we've ever seen in history. We had a big imbalance in the 80s and 90s, and then it turned when the housing market turned. This one here was also a housing market problem. This was the tech bubble. Now, we could very well be in a tech bubble. We could go down, and I'm not denying that we can't go down. But I know the housing market is strong. So I don't think it's coming from there. I know people will debate, the sales have fallen down. It's like, yeah, but there's no inventory. You can't be in a bubble with no inventory. So sales can come down. Yes, things can slow, but you can't go in the opposite direction without inventory, my opinion. But I don't know. I just thought this was interesting. Wanted to talk about it a little bit. It says, expecting yourself to act rationally in the markets is like saying you'll call it a night after 2 beers with the boys. And you know you're not going to stop at 2 beers. The boys get going. It's going to be a long night. DNN, so something different. Breakout is nearby. So we've got a hit, another trend line hit, breakdown, breakdown, breakdown. And now we've got a bullish flag pattern that we could potentially break higher for DNN. Now, I'm seeing this across the board for uranium stocks, for ETFs. I think we're real close, guys. And if we're seeing the majority of other commodity sectors start to break to the upside, lithium, rare earth metals, oil, and some of the natural gas companies, I would expect uranium to follow suit. So you want to add and stack up the confluence of information that we have, add it all together, and come up with a picture. We also know that uranium is pretty cheap. Not cheap in terms of like total dollars, cheap, but cheap in terms of asset versus asset on a ratio perspective. Uranium is very cheap, and I think we could see big upside here at any point. JC says 1.16 million ounces of silver out of the COMEX vaults today. The physical silver squeeze has resumed, and the price suppression games are about to end with a parabolic move. China's ramping stimulus, just as employment and credit, are materially weakening in the U.S. perfect setup. Just remember, China has a declining demographic. They're going to use stimulus. They're going to pump stimulus into the system. Generally, what happens is when that stimulus comes into the system, because they just went through a recession in housing. They're now coming into a recovery phase. The recovery phase is going to be pretty weak because they don't have the demographic really to step into a large demographic. It's actually falling in terms of the growth rate. So what I think is going to blow up there is the tech sector might be good. And remember, if their currency strengthens at the time that ours weakens, we could see a pretty big tech boom over there. It's possible. So, I mean, that is one sector that you can look at, which is potential investment. Now, is it going to be as strong as the commodity markets? That's what you're going to have to weigh against. You know, our commodities going to outperform some of these emerging markets, and it depends on how you want to approach it. I think oil and some of these other sectors, uranium, could do some crazy things, and I think they will be stronger over the commodity bull market, which generally emerging markets have bull markets at the same time that commodities have bull markets. So that's what you have to really measure against. So here is XAU to USD. So that's gold price in US dollars. It says, when not if, a move to $3,000. Swiftness will be the surprise for many. We're right here. This is a continuation pattern. It's a cup and handle, and we're about to break to the upside. I think we are going to go upper 2000s, lower 3000s. It could be anywhere around there. I also think that silver and platinum could do some crazy stuff as well. And remember, when this goes higher, it's going to reprice all of the commodities with it. So you better get ready. It's going to be a fun ride. New CoreLogic reaffirms its outlook this is plus 4.6% U.S. home price growth over the next 12 months. I thought we were in a bubble, guys. Where is this bubble? I mean, CoreLogic might be wrong. I doubt it, but I would assume that we're going to go higher. I don't know how much higher in home prices. Why? Because we don't have any homes. Gold, we have not given the go signal yet, but it is very close across multiple charts, including this one. Gold outperforming the US dollar's performance versus its peers. The DXY is bullish for gold. So there we are. We could be breaking at any second, and that is something to watch. We also have a 8-year rate of change increasing. So that also looks very good for gold. Coming on down, is rhodium a buy here? Now, I know a lot of people, I don't talk about rhodium and palladium very much because they generally do very well in a different environment. But this has been declining quite a bit. You can see this is the bull trap here. We've come all the way back down. And what we're going to do is we're probably going to put in a double bottom. A double bottom's a big kind of booty bottom that we call it. It needs to do that. I know a lot of people always ask, well, what are some platinum miners? What are some platinum miners? Guys, the reason I don't like platinum miners, the miners that are PGM metals, is because you got rhodium falling and palladium falling. And that is a majority of their dollar content is in these metals. Now, if we bottom here in rhodium and palladium, and even if platinum goes up, those companies could be pretty good investments, especially if rhodium and palladium start going up with platinum. If they all go up, I call it the trio. The trio goes up, we could have some pretty good investments in some of those companies. Now, the risk, since a lot of these big miners are located in South Africa, that's where the majority of these platinum group metals come from. There's a lot of risk there because their electrical grid is total garbage. So I don't know. That's what you're going to have to balance is that risk reward and what you want to go after. But rhodium and palladium have been going back down, and hopefully we can bottom soon, and maybe those will be good investments. Grady again. So he says, posted this chart on September 26th saying the final top was most probably in. It was. And said then getting out of the USD is a very good idea. Also called the top in March of 2020. Currencies produce amazing technical analysis now, which is included in the weekend report that he's got. So false breakout coming up. You can see that we had a declining relative strength indicator. We came back down and we think that we could head lower in the dollar. And that's my take as well. It's going to be a tailwind for commodities and emerging markets. Crude oil getting ready for a move. So this is crude oil gaining some traction here. This was 1990, huge denial. 1990 was the end of the housing market boom. In 1990, we went into a oversupply phase and it declined. So that cycle was done. We went into 2008, which was a gigantic cycle, top. Came into a consolidation from 2008 all the way to the breakout of 2021. We've broken out. We've come back to do a retest to support, and I think we are ready for hopefully a big move to the upside in crude oil. Ferg again, he says, Europe is going to lose this game of energy musical chairs over and over again to the likes of China. China locking in 27-year Qatar LNG contracts. Europe, we're waiting for legal clarity about how this will impact our decarbonization goals. Okay. As China locks in these contracts and buys up the LNG world, good luck for Europe. That's all I'm going to say. Ferg says he's got two balls. I mean, okay. And neither are crystal. But I think the Chinese might be onto something here. China is buying gas like there's still an energy crisis. Remember Warren Buffett buying the LNG market? Remember how I'm really bullish on natural gas? All this is tying together. I think we're going to see a gigantic bull market in natural gas. And guess what? This guy's positioned for it. Firms have signed long-term deals with any other nation, more than any other nation. Buying spree comes after China grappled with fuel shortages. China is on natural gas shopping spree, and officials are happy for importers to keep striking deals even after global energy crisis has eased. Yeah, they're locking it in right at a really good time. So China, they're buying. Buffett is buying. So what do you think we should be doing? Yeah, that's what I thought. Buying. So Grady again, it says the final and third silver bull move since Nixon close the gold window is upon us. End of the rainbow, get out of the rat race stuff if you play it right. The next commodities inflationary phase will burn you hard if you don't play this cycle, is what he's saying. First bull move, second bull move, and we got a big third leg that is coming, the third bull move, which will kill the present global monetary system. Any number above 3,000% is what he thinks potentially silver could go to. Now, during the hyperinflation back in the day, we had platinum outperform gold and silver. I don't know if that's going to happen again, but it could, and we are positioned very well with platinum being at a very low price. So maybe, perhaps, gold, silver, and platinum go up together in this inflationary phase that Grady sees coming, and I also see an inflationary move coming. But that's where we got it, guys. That's where I'm going to end it. That's what we've got for today. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website. Remember, we've got a discount going on. Happy birthday. Get yourself in there. You can also see it in the description link below. And that's what we've got for today, guys. So We'll catch you later. This is Finding Value.